As Bitcoin and the broader cryptocurrency market continue to experience sideways movement, whales have been steadily filling their bags with more Bitcoin and other digital assets. In this video, we are going to examine what the whales are doing, explore Bitcoin's price movements against the historical context, and present the argument as to why now might be a good time to accumulate. According to on-chain data tracked by Santiment, the share of supply held by whales holding over 10,000 coins increased from 10.6% in October 2021 to 11.7% in August 2023, for an overall increase of 10%. Coincidentally, addresses with up to 1 Bitcoin have also been heavily accumulating new coins over the past couple of months. Overall, the number of Bitcoin holders has been on the rise as well, growing from 38 million to nearly 49 million since late 2021. Interestingly, the number of holders has increased, despite the bear market and increased regulatory scrutiny in the time period. In fact, HODL has been the name of the game for some time. As of August, the supply held by long-term holders reached an all-time high of more than 14 million Bitcoin, according to a recent report from Glassnode. Meanwhile, the supply held by short-term holders dropped to the lowest level since 2011. According to Glassnode, holding remains the primary market dynamic, which signals a steady conviction amongst existing holders. However, the dynamic also highlights that these investors are likely the only ones who remain. It is worth noting that Bitcoin is not the only crypto whales have had their eye on. XRP, Polygon, and Litecoin are some other digital currencies that whales have been accumulating. Polygon, for instance, has been particularly attractive to whales. The percentage of addresses holding between 1,000 and 1 million Polygon tokens increased by over 80% in the past years. XRP has also seen a particularly high whale activity over the past couple of months. The share of addresses holding between 100,000 and 1 billion coins increased by more than 30% since last September. So, what are the reasons for increased whale accumulation? One of the reasons could lie in the fact that Bitcoin is currently trading very low when pitted against the historical price context. Based on Bitcoin's historical price data, the currency might be oversold at the moment. The Bitcoin Rainbow chart identifies the current price level of roughly $26,000 as the accumulation zone, suggesting that it could be a good idea to stack more coins at these market rates. While there's no guarantee that Bitcoin will follow its previous price patterns, it seems that most investors are currently shifting their focus to the next Bitcoin halving, which is estimated for April 2024. That brings us to the second reason for increased whale activity and long-term holders' reluctance to sell their coins. Historically, each halving event kickstarted a new market cycle that saw Bitcoin set a new high. In 2013, Bitcoin reached a local top above $1,170. 4 years later, in 2017, Bitcoin surpassed $19,000 for the first time ever. Another 4 years later, in 2021, the currency reached its current all-time high of nearly $69,000. It's difficult to predict what price activity the next halving will bring, but there are some indications of what we could expect based on historical movements. The table shows all 3 halving events and Bitcoin's price performance before and after each one. As you can see, Bitcoin recorded very impressive price uptrends after the first and third halving but suffered a modest loss in 2016. During each halving cycle, Bitcoin reached a new all-time high. By extension, other cryptocurrencies also followed in the footsteps of the world's largest crypto and experienced notably bullish price activity. That said, let's explore the algorithmic price prediction for Bitcoin to see what we can expect in the coming months and years. According to the algorithm, Bitcoin could rally to $175,000 roughly a year after the 2024 halving. That would mean that Bitcoin would gain more than 500%, which would roughly coincide with historical price trends. For added context, the currency might rally to $300,000 by 2029, which would be roughly a year after the 5th halving event. The sideways movement permeating the market in the past couple of months, whale accumulation, and the reluctance of long-term holders to sell their coins all indicate that most crypto investors are banking that the next Bitcoin halving will kickstart the next bull run. There's considerable historical precedent that that will indeed happen, and that we'll see crypto markets turn bullish after the halving in early 2024. Do you think history will repeat itself with a Bitcoin pump after the next halving, or we'll see the market behave differently than in the past? Let us know in the comments below. Good luck on your crypto journey.